All right, today we're going to learn a new language. And no, I'm not talking about Spanish or French, but the visual language of the market. We're going to break down the absolute fundamental building block of Japanese candlestick charts. So, what if you could look at a chart and just instantly get the emotional state of the market? That's the whole magic behind candlesticks. See, they don't just spit out prices at you, they actually reveal the story of who's winning that constant daily tug of war between the bulls and the bears. Now, check this out. Both of these charts use the exact same data, the open, high, low, and close for a period. But just look at the difference. The standard bar chart on the left, I mean, it's functional, sure. But the candlestick chart on the right, wow. It gives you this almost 3D view that seems to just jump right off the page, making the story of the price action immediately obvious. So how in the world do we get from that raw data to this rich visual story? Well, let's break it down. We're going to deconstruct the candlestick and see exactly how it's built piece by piece. Okay, so every single candlestick has three main parts. First, you've got that thick part right in the middle. That's called the real body, and it tells you the range between the opening and closing price. Then you have the thin lines sticking out of the top and bottom. Those are the shadows, or some people call them wicks. The upper shadow marks the absolute highest price of the session, and the lower shadow, well, you guessed it, it marks the lowest. Every single part tells its own piece of the story. And, this really gets to a core philosophy here. In Western charts, all those data points are kind of treated equally. But in Japanese analysis, the real body, that distance between the open and the close, that's the essential, meaningful price action. The shadows, they're just seen as the noisy, sort of irrelevant fluctuations during the session. Okay, so once we have that body, its color tells us maybe the most important part of the story: who actually won the day's bout. So if the real body is white, or sometimes you'll see it as hollow, that means the closing price was higher than where it started. Simple as that. It's a clear victory for the bulls, the buyers. They got in there, they pushed, and they drove the price up by the end of the session. And on the flip side, if that real body is black or filled in, the close was lower than the open. This is a win for the bears, the sellers. They took control and pushed that price down. Just the color alone gives you an instant read on the day's momentum. So, now that we've got the basic anatomy and the color down, let's look at a few of the key characters in our story. Because the shape and the size of the body and the shadows, that's where you get all the juicy details. Right. So when you see a long real body, doesn't matter if it's white or black, you are looking at a session where one side was just totally dominant. A long white body shows that the buyers were in control pretty much from start to finish. That's some strong bullish pressure. And a long black body? It means the sellers were just relentless. The length of that body is basically a direct measure of how intense that victory was. But what happens when the body is really small? Well, then you get something called a spinning top. And this shape tells a story of conflict, of serious indecision. The long shadows on top and bottom show you that both the bulls and the bears made some big moves during the day. But by the end of it all, neither side could hold their ground, and the price just snapped right back to where it started. It's a visual stalemate, a real moment of uncertainty. And what happens when that indecision is absolute? That's when we see the incredibly powerful doji. Now here, the open and the close are the same, or at least very, very close. So there's no real body at all, just a horizontal line. This represents a perfect tie, a moment where the forces of buying and selling are in total equilibrium. And that, right there, is why the doji is so important. That kind of balance often signals a potential turning point. It's like the market is just taking a breath, a moment of doubt where a strong trend might be about to reverse. So why does all of this matter? What's the big takeaway? By learning to read these simple shapes, you're going way beyond just tracking the price. You're learning to read the emotion and the psychology of the market. The real power of candlesticks is that you don't lose anything. You can still apply all your favorite tools like trend lines and moving averages right on top of them. But what you gain is this whole new layer of insight. You get these unique visual patterns with these really cool descriptive names, like a hanging man or dark cloud cover. They aren't just for fun. They're a kind of shorthand designed to instantly tell you about the emotional health of the market. And this really brings us to the core philosophy, which Steve Nason, the author of the source material we're looking at, captures perfectly. He says the Japanese focus so much on the open and the close because those are the two most emotionally charged moments of the trading day. So the real body of the candlestick, it's the purest visual picture you can get of that emotional fight. So now you have the basic alphabet. You know how to construct a candlestick, and you can read its simplest stories of victory, of defeat, and of total indecision. So the next time you look at a chart, don't just see lines. Ask yourself, what story is it trying to tell you?